Thank you so much. Welcome, everyone. I'm really, really pleased to be here with you today, especially on this beautiful summer-like day. I'm glad you've made the time to talk about investing. Before we get started, I would like to introduce myself a little bit and tell you how I came to be here speaking to you now as a retired partner. I have been in investing for over 25 years. I've spent almost 2 decades in a very, very large American firm called Capital Group. And I just retired in December to take a break and be with my family a bit more and do different kinds of investing, which I'm happy to discuss with you in Q&A a bit later. As you can tell from my accent, I'm not British. I went to school in America, having been raised in the former Soviet Union. I am from Ukraine. And when we came to America in the very early 80s, the market economy and capitalism were completely new concepts to me. And I tried to understand sort of why living standards are so much higher in America versus where I grew up. And one of the things that I learned very quickly is that the market economy depends on savings and investments. And people in America always knew that if you invest in a good house, if you invest in a good company, if you invest in your pension, in the long term, you will have more money to spend. And that, excuse me, and that regardless of your income or pension plans, it's always good to save for the future. And so I was interested in learning more about that and sort of how that influences the world. I went to Georgetown University in Washington, D.C. to study international relations and international economics. And like many of you, I didn't really have a clear sense of what is a specific job I want to do, but I wanted to better understand this interplay between how people think, how societies function, and what creates better outcomes for everyone. So I joined JP Morgan right after my university degree, both because I wanted to learn more about corporate finance and also because I had a lot of student loans. And as you know, in America, that tends to become quite a large sum at the end of your education. So I spent a number of years on Wall Street doing corporate finance before going to Harvard Business School for my MBA, which is when I really understood what a long-term career path for me looks like, with a view to combine it with other things I'm interested in, like travel, like having a family. And investment management was actually something I didn't know much about until I took a course called Investment Management 101. And a fascinating and really wonderful professor of mine, who's originally South African, but also was an immigrant to America, introduced me to this idea that you can become a fractional owner of a business, and you can become a very active fractional shareholder of a business, and help to create wealth over time and create value over time for the company and for your clients if you're an intermediary. And I then went on to work for Capital Group in 1996 in New York, and I moved to London in 97, and then established sort of my home base here. My husband is French. Our kids are in the French lycée and actually doing their homeschooling next door, as it happens today. And we have been between Paris and London essentially since then. Capital Group is a very large organization, as I mentioned, and there are $1.9 trillion of assets being managed by the firm on behalf of clients. And my responsibility was on the emerging market equity side. That means that I was always very involved in developing countries, and I was always very involved in trying to find the best companies to invest in areas like emerging Europe, Middle East, Africa. And then I expanded my responsibilities to Northern Europe and Scandinavia. And it is actually by covering Scandinavian countries that I realized how important sustainability and ESG is going to become across our portfolio. So the last few years of my time at Capital, I was heading up the ESG effort. And I can tell you more about that in Q&A if you're interested. But it really opened my eyes to other kinds of things that I might want to do later in life, including impact investing and perhaps working with an endowment to help them orient their investments. And that's why I decided to take some time off and spend a little more time at home with my kids, but also think about the next step in my career. And this is one of the things which I think is truly valuable when you think about your career in the long term, is that you may have different phases, and you want something that will give you the flexibility and the knowledge to make those moves when it's appropriate for you. So that's a bit about me. Now let's talk about investing. First of all, why is investing important? And I'm going to share my screen with you here. Uh, what is investing? It is all about allocating savings to businesses and enterprises that are going to basically make use of that money to grow. To build a business, to hire people, to create products, to create services. So it's a very, very dynamic field, and one that requires you to think about the long-term use of money. Now let's take an example. On page 4, you see Facebook and Snapchat, and clearly companies that you know a lot about and you've used, and maybe like one more than the other. And those companies need the marketplace, they need investors, and they need assets to grow. They need to invest in their ability to reach more customers. They need to have transactions that essentially enable people to do things they otherwise wouldn't be able to do. That is a process that is driven by innovation and great management, and it needs a strategic vision. And you as an investor, much like in the Dragon's Den, would basically say, I believe this will work. I believe this will work better than other businesses, and I'm going to back this company. So if you were to back Facebook and Snapchat at the time that they came to the market and sold their shares, so you could become a fractional owner of the business, you see a couple of things. First of all, it's not a day-to-day win. It takes a while to see how a company will create value and how you as a shareholder will be able to benefit from that. But you see with Facebook, they've been tremendously successful. And if you held their shares since the day that they became publicly traded, you would have multiplied substantially your initial investment. Whereas if you had invested that in Snap, unfortunately for now, that would have been, pretty lousy investment. But notice that the time frames are also very different. So one thing that I would like you to think about and take away from this particular part of the discussion is that investing is a very long-term game. And it means that you need to think about not just how the company is going to do today, tomorrow, this year, or next year, but how it's going to do over a long period of time. And you have to have the patience to stick with your convictions and stick with a vision that initially made you think this company might be a great growth business that you want to be a part of. And you see with Facebook, during the time that it's been a listed company, it had a lot of ups and downs. But you are much better off having held that investment throughout this time than trying to trade around the little ups and downs of how the company results were reported or how they discussed their activities in the quarter. So the long-term holding period, and what we sometimes say is the old quip in the industry, it's time in the market and not timing the market, which is really important. And if you look at what's happened with Snap, it doesn't mean that it's a bad company. The shares have not done well, but that can be for a number of different reasons. And some of those reasons might actually be changing, and perhaps this will be a good company. So you must always think about looking ahead and anticipating the trends and seeing what hasn't worked well before and what might work well better. And so just because the stock hasn't done well doesn't mean it won't in the future, and you've got to pay attention to all the signals that the management and the board are sending by how they communicate with society, how they communicate with their employees, and the information they publish, which is very extensive now, and how they're addressing problems of the past. So you might even think at one point, well, I might want to hold on to both. I might want to be an investor in Facebook and Snapchat, and one of them might do better than the other at any given point in time. But if you want to have a diversified portfolio, which is very, very important when you think about the long-term ups and downs any business might have, then at some point you might want to actually be invested in both companies. So let's talk about who are the investors. There are many different types. It's one of the things that really attracted me to this industry because it's so dynamic and there's so much variety. There's really not sort of one establishment that does it all. There are pension plans that are run by companies, or they're part of universities. They pay the pensions of their employees over the long period of time. Universities and charities might be a little bit more mission driven, so they might have pensions that have more of a purpose that's aligned to their ethics and values. There are insurance companies. Insurance companies, as you know, need to pay people out when they have a car accident or they have dropped their iPhone. So they also need to invest for the future to be able to take money out to pay people when that's due. Their families and individuals. This is very, very prevalent in North America. In Canada and US, most households have investments directly. It's a little less prevalent in Europe, and the UK is somewhere in between, but it's a very, very large market. And of course, they're countries. And we don't often think about that as being an important source of investment funding, but often countries that are exporters of oil, for example, Norway and the Middle Eastern countries, other countries in Asia that have large saving pools, they have a lot of savings in their economies and they want to deploy them, that comes through their sovereign wealth funds. And they have somewhat different needs, and as I mentioned, they may have also different time frames of when they need to use the money. And the market for investing is hence also very broad, and that makes it also very interesting because on the one hand, you have equities, which are shares of companies, which gives you fractional ownership. You have debt, which are obligations of companies. Think of them as being a loan that you make to a company and they promise to pay you back in a certain period of time. So you don't get to be a fractional owner. You don't have a vote or a voice in the management of the business, but you do have certainty of getting your money back in a certain period of time with a certain interest paid on that. You have property, which is real estate and infrastructure and lots of sort of big physical investments that are also a very, very important area. And there are others. And by others, it's actually a very growing field of new types of investment vehicles, including impact investing, including forestry, and including even things like media rights. So there's a lot of variety of types of investments that address the needs of the investors to channel their savings. So when you actually think about what is the financial market, it's like a big traffic light. And there's lots of ways for traffic to flow and lots of ways for investments to grow when they're channeled using appropriate information, appropriate analysis, and a long-term investment horizon. So let's talk about who are the investors. The investors are very diverse, just as investments in the financial markets are very diverse. Although I think reputationally, investments are sort of not in a limelight of interesting career paths for diverse people. And I suspect that partially it's because it's an industry and a career path that lends itself to collaboration. So it's not like a celebrity industry where you will automatically know, oh, you know, such and such was a great investor. Well, besides maybe some of you will know Warren Buffett. And hopefully many of you will know Helena Morrissey. And they're all outstanding people. But typically, the investors are people who work really well together to create portfolios that succeed over time. That means they have to be very communicative with each other. They have to do a lot of deep analysis and deep work. It can be a great career track for people with very diverse backgrounds. Some of the best investors I've worked with majored in philosophy, and others have majored in physics. And my degree in economics, you know, really gave me a good framework to understand sort of how systems work. But, you know, I had to really learn the basics of balance sheets and accounting and other things that were much more sort of vocationally linked to investing. But there are people from all walks of life who've been tremendously successful and tremendously satisfied with this career track. So don't think of it as being a bucket of people who are sort of good in math or, you know, good at reading long reports. There are many skills that are very, very useful, and especially in the kind of a collective environment where a lot of investment decisions are made. So let's then move on to how to invest into an amazing company, a global leader like Apple. Well, first and foremost, let's put it this way. No matter when you had invested in Apple until about 2006, it would have been a decent investment. But what's happened since the launch of the iPhone and since Apple became a household name is truly spectacular. And it is now literally a trillion-dollar company. So what does that mean? Well, it means that Apple produces products and services that everybody in the world wants to buy. Apple has a very, very complex business because a part of the company, but only a small part of the company, is based in Cupertino, California. But its supply chain and all the different companies that contribute to Apple's success are based all over the world. And over 200 suppliers in Asia do nothing but just supply the little tiny bits of your iPhone. So to understand Apple, you actually have to understand a very broad and diverse ecosystem of companies around the world that rely on each other and rely on Apple to have a smooth running business and to have the visibility of the orders they need to fulfill, the number of phones they need to reclaim and recycle. You can imagine now with Apple having over 2.5 billion handsets in the world, they have quite a big responsibility to what happens after you're done with your iPhone and what happens in terms of using up the spare parts and recycling as much as possible. And this is not a question that Apple had to think about 20 years ago. And now it is one of the top 3 strategic issues that their CEO talks about. And they have a new head of sustainability who had been previously in the US government and the Environmental Protection Agency. So this has now become a strategic issue for a company that is really, previously known as just sort of a techie dream. And now it's a real sustainable investment question. So speaking of that, what is responsible investment? Well, we know that a few major trends have really driven people to focus more on sustainability and the responsibility of investments over the past decade, although it's been a movement that started a couple of decades ago already. And the reason why it became so important is that companies have become so big, and we just talked about Apple being a global company. There are so many different things that happen in the manufacturing process and in the consumption of all the, both technological and consumer goods that we consume nowadays, that it creates a lot of externalities. And by externalities, I mean that there are effects of a business that are not necessarily intentional. Nobody wants to pollute the ocean. Nobody wants to create a climate change that's detrimental to humans, but it has happened. It has happened because the scale of business is so large and companies are so large. Now 70 of the 100 largest economic entities in the world are actually companies. They're not even governments. So it is now expected that companies have a responsibility and investors have a responsibility to address this. And what that means is that we have to be engaging with the boards and the management. We as investors need to have a voice, and we do that through proxy voting once a year. As an investor, you have the opportunity to participate in the annual general meeting of shareholders and vote on resolutions. But also you have to be very consistently signaling what's important. And that's why those 3 letters ESG have become an acronym for that kind of activism and action that societies want companies to take to protect the oceans, to protect our clean skies and clean air, and to protect people, especially in very, very tough, critical moments as we're living through now with coronavirus. That responsible investing starts with companies, but it doesn't end there. It also goes to the investment community, into all of us in civil society. So why work in investing? Personally, for me, one of the biggest reasons is that it is a profession that doesn't require just one kind of skill set. It is not something where you need to be a math whiz. It's not something you need to be a physics whiz for one thing or another. It's a very holistic sort of career that requires you to be, first and foremost, intellectually curious. And secondly, it requires you to work well with people, to ask good questions, and think about the long-term and anticipate long-term outcomes on things that you may know a lot about or little about. So you need to be learning and changing every day. And that requires both qualitative and quantitative skills. It is very transparent. So I think also this is a really important success factor for women. And I think this is sometimes overlooked and underestimated as being a really valuable part of thinking about a career is how will you be measured? In investing, measurement comes with comparing you to market returns or to other objectives and benchmarks, which makes it easier to know if you're progressing and if it's right for you. And also, very importantly, it will enable you to become financially independent and financially secure faster than many other careers. And we can talk about that in Q&A. But one of the things which I think is really important is that investing enables you to work independently enough so that there is an opportunity to sort of ramp up and ramp down when you need to in your personal life. It's also an opportunity to work remotely often. And now that everyone's working remotely, that probably will become even more embedded. And I think these are all really important things. So I am now going to take your questions for about 20 minutes. And I hope that you can ask me some things that I discussed in the presentation or anything else that comes to your mind about the field of investing. Thank you.
Great. Thanks very much, Natasha. That's brilliant. Just to the audience, if you can ask your questions via the Q&A button, that would be great, and then we'll channel it through there. Just to kick off, Natasha, could you describe maybe what a typical day looks like for you?
Absolutely. Every investment firm will be slightly different because of their unique investment philosophy or process, but generally all investors will start their day by looking at what just happened around the world overnight, because markets in Asia have been open while we've been sleeping, and the US markets closed hopefully when you stopped looking at your email and went to bed the night before. So the first hour of the day for investors typically means getting information, perhaps looking at the financial press. The Financial Times is my go-to publication, and I know that they enable free access to all schools, so you should definitely be taking advantage of that when you have a little free time. And once you've done sort of an overview, there's an exchange always internally, and that can be by Zoom or email or sitting around a table with coffees, as sort of, what are you thinking? Not necessarily about the day's news, but what are your thoughts in general? Checking in with people is really crucial because, again, investing is partially quantitative, but also very qualitative. And your perceptions about what's important and what's driving a company's success may change as facts and circumstances change. And we've just really seen a lot of evidence of that in the recent market volatility because of the coronavirus and all the reactions the governments have taken. So it's really important to communicate. And then it's important actually to do sort of a deep dive. So I always blocked out about 3 hours before lunch to just do deep work. And by deep work, I mean I would take the sustainability report of a company I'm doing work on that I'm trying to understand more deeply, or take the annual report, or look at some of the investment models, some of the financial models that we've had in-house that I've built myself to sort of go a step beyond the headline news. That's also a really important part of being a good investor because, you know, information is so abundant. People know lots and lots of things sort of topically, but to create some sort of a differentiated, unique insight that reflects your opinion and what others might not think requires you to step away from the market noise and to sort of think very critically, independently by yourself. In the afternoon, I would spend a lot of time on either live meetings, or nowadays it would be calls, with company managements. Company managements are very responsive when investors ask good questions. I found with Capital Group, one of the sort of superpowers we had is being particularly focused on the long term and thinking more in terms of buckets of strategic issues and not getting too hung up on, you know, just the quarterly updates. And, you know, ask questions about what they're working on, the sort of the research and development efforts, human capital management, those things, you know, they take time. And, you know, there's nothing like having a conversation, whether it's face-to-face or on Zoom, but that also takes a lot of time. And I found it very, very enriching. My job required a lot of travel. I've always enjoyed that aspect of it in terms of meeting with companies and meeting with clients and being sort of a conduit, you know, and translating ideas and translating sort of what's happening in the portfolio to our investors, our end clients too. I think that the industry will now probably take a second look at how much people need to travel versus do, video conferencing as we are doing today. But that connection and that connectivity of communicating ideas between market participants remains a very important and a very compelling part of being an investor.
Great, thank you. Okay, we've got quite a lot of questions coming through. To start off, if I did a science degree, would I be able to go into investment management or banking?
Absolutely. That's actually great preparation because it has taught you to think critically and to test ideas. Scientists are all very good at sort of forming their hypothesis, testing assumptions, and revisiting earlier ideas. I think it's actually a great background. What would be helpful is if you do spend time, whether it's reading Financial Times or The Economist or reading some business books to get a sense of what kind of an investor would you be? Would you want to be someone who really focuses on the healthcare industry, let's say, and really brings your science knowledge to that? Or do you want to use your science degree as a framework and, become much more of a generalist and be interested in investing in lots of other things? But absolutely, it's a great start.
Great. Next one, what would be your top tip for getting into the firm of your choice, such as JP Morgan?
Well, JP Morgan has a graduate training scheme. JP Morgan also has summer internships for MBA students. And JP Morgan has a great deal of information on their website about career opportunities. So I think it's really important to know a lot about a firm and why you want to work there. One of the things that appealed to me a lot about JP Morgan and later Capital Group is their values. And I knew that those values are the backbone of a very strong corporate culture. JP Morgan was probably the first industrialist in America who understood the value of people eating together at lunch. And so he made lunch free for everyone who worked in that firm. And still today on 60 Wall Street, lunch is free for everyone who's in the office. And that's just a little glimpse into the thinking of a man who built this incredible business. And, Capital Group is a partnership. The value system really appealed to me as being very long-term. And, when that comes through in your interviews, it makes people understand why you want to work there and why you would be a valuable long-term member of the team as well.
Wonderful. Then we've got a couple of questions sort of following on from that. As a graduate, where should someone start looking to get into investment? If they wanted to get into investment, where should they start looking? And how would you start your career in investment?
There's lots of recruiting now online, and I absolutely encourage you to look around the investment firms in London and see if anything is posted on their website, and going through also the Investment 2020, which is a nonprofit that's done an outstanding job of getting graduates to work sort of on their platform, and then they tend to get hired by other places. That has been the case with Capital Group as well. We hired a few people from Investment 2020 and the Investment Association as well. So you can look at sort of both the profit and nonprofit sectors to get started, and definitely do a lot of footwork. Get on LinkedIn, get on these companies' sort of radar zone, read what they publish, look at their webinars. I have been absolutely amazed by how much content is now available for LinkedIn and how much sort of idea generation and true learning you can accomplish in your own time. And that'll help you both figure out where to apply and how to apply, and also, be more confident and more credible in your interview process. So if you need to really understand who does what, again, definitely try to read the Financial Times. On Monday, there's the investment management supplement, the FT Money supplement. And there are lots of companies that are profiled there, lots of people who are profiled. Then you can go on LinkedIn, find those people, try to connect with the companies, and start to get into the flow of information.
Great. And following on from that, we've got a lot of questions around what books should you read? Are there any there's one question here says classics such as Monkey Business and Liar's Poker, etc. But anything else that you would recommend reading?
Absolutely. I think the Bible for all fundamental long-term investors is anything written by Warren Buffett. So it's like a series of Bibles. So I definitely think that if you want to understand fundamental stock picking and thinking about what makes a long-term investment succeed over time, read anything written by Warren Buffett and Charlie Munger. I personally think it's also very useful to have more of a historical overview on sort of what money does and where money comes from. There's a wonderful book called The Ascent of Money by Niall Ferguson, the Harvard professor. I very much think that's a must read. And there are probably some other things you can, like Liar's Poker is a very fun book to read because it gives you color and context to some of the excesses that financial markets have seen over the years. And, those things won't go away. So it gives you a sense of also what's the risk of being involved in a company that does something wrong, or companies that do things, that are not completely ethical. I wouldn't call it a must read, but I know my son has enjoyed reading it. So I think you can put that on your list safely.
Next one, if you are a woman working in finance, is it harder to build social networks?
That depends on what kind of a woman you are. I think women are very good at networking, but they don't like to use the word networking because it seems like you're sort of intentionally self-promoting. And I have observed that women are just not comfortable with that concept, even though it's completely natural and everyone does it. And, men tend to not hesitate to have that because they feel that ambition is their right. And, I think women should feel that ambition is their right too. So it depends on how comfortable you are, just sort of saying to yourself, yeah, I'm going to put myself out there, because not only do I want to meet people, maybe I can also help people. I think you should always think of networking as being a two-way street, and not only seeking out people who can help you as mentees, but mentors, but also seeking your mentees, because at every step in your career, you can be helping someone. And so if you hesitate on this whole networking thing, think of it as your ability to help someone else. And, that might give you just that little umph of energy you need to be doing that.
Next question we have is around what sort of maths and analysis do you do when you're looking at your investments?
Great question. So the answer is it depends on what kind of investing you're going to be doing. If you think about the range we talked about with equities and debt and real estate and other, I would say that equities and fixed income are the most sort of straightforward in terms of the type of analysis you need to do. You need to understand how to use Excel. You need to understand accounting principles. You need to understand how to sort of go through a ton of data and distill it to pick out the most important parts of it. And you need to know how to communicate data and information effectively. So those are things that you can learn through an investment management course or reading some of the materials that are, again, online or in a book. Some skills are very technical, such as accounting and building an Excel spreadsheet and forecasting company results. But look, this is not rocket science. And this is absolutely achievable and accessible to anyone with a solid foundation in basic school math and basic ability to learn new concepts. There are some things that are more specialized if you go into very quantitative investments. If you go into alternative investment strategies or hedge funds, there's a lot more advanced computer modeling, more mathematical sort of firepower that's used. And, that really suits some people. That was not what I wanted to do or what I think is my aptitude, but it's definitely out there. And there are some funds that are doing super interesting algorithmic trading. If you look at Jane Street Capital, there's some other new things that are popping up that are really interesting. It ranges across the whole spectrum of skills and aptitudes.
Great. Well, the next one, what has been the most exciting or interesting investment you have worked on?
Gosh, there were many. One of the most interesting aspects of investing in emerging markets is that you can see a company transform over the period of 5 to 10 years, which is not a long time in the life of a company. But one of the companies I invested in about a decade ago was a South African pay TV company called Naspers. And in the time that we were invested in, that I followed the stock and I was sort of the lead analyst on it, The company completely metamorphosized. It ended up becoming an e-commerce player across 40 other emerging markets. The company then also relisted and allowed South African investors to continue being invested in the South African business, but then attracted foreign investors with a listing in Amsterdam. And it is now, I believe, the largest sort of tech company in Europe with a Dutch CEO and a very international investment team and some very successful operations in food delivery, e-payments and e-commerce across the world. And, they're now one of the largest players in South America. So that's very exciting to see a business that started out as being sort of a great cash generator and an interesting innovation sort of model in a domestic market, and then grow and attract talent across the world. And one of the things that they were able to do also very early on is understand the huge potential of e-commerce in China, and they ended up investing in a company called Tencent, which then was just a tiny little startup and is now a giant, as you know, in gaming and online entertainment. So it has become, one of the biggest tech investors as well, and it's been very gratifying to see that. But it takes time. It's not an overnight thing.
Well, we've got lots of questions here, so we might not be able to get through them all, but I'll crack through. So a couple of questions on what inspired you to go into investing, and what is your best advice for becoming an investor?
Well, what inspired me to go into investing is that I understood that unlike investment banking and corporate finance, which I had done before business school, this is something that you can get better and better at over time, even if you have some ups and downs, because you will have some great years and some not so great years, but you're not judged based on the success of your latest transaction, which is what I felt was disappointing with the sort of corporate finance investment banking models, that it's a deal-driven business, and every deal is important, every deal is exciting, but it's not cumulative. What I really thought was interesting with investment management as a career path is that it's so cumulative and you get better and better over time. So your vintage sort of improves with time, like, a bottle of fine wine. And I thought very few careers really offer that, and especially to women. So I like that. I like the aspect of transparency, where your results are measured against something that you can see and identify. And so in terms of promotions and sort of also understanding how good you are, you have very tangible ways of doing that. And third, and I think this is important, is that I wanted to be financially independent. I wanted to have financial security and an ability to create, my own nest egg, and to feel that, I have done something that allows me to live a lifestyle that I've always wanted to have. And that, I wanted to live in the city. I wanted to live in central London. Before, when I lived in New York, I also wanted to have that freedom. And this is an industry that allows that over the long term in a way that is really transformational. And my best advice to you is to educate yourself on the different kinds of investments that are out there, the different kinds of investment firms that are out there. You have incredible access and wealth of information now online. You can even do, a mini course. You can do a free online mini course that'll teach you the basics and fundamentals of investing, and see if it's right for you, and see if you're someone who would prefer to be a fractional owner of a business. So shareholder, if you'd rather be in a position where you're analyzing bonds and, you have less risk in that sense, because you're going to get your money back, but you need to analyze sort of the various scenarios of downside risk. Or if you prefer the fixed asset route and, investing in roads and buildings and other things. So there's a lot out there. So I think my best advice to you right now, especially as we head into the summer and you have time studying flexibly at home, is to learn as much as you can about what might inspire you within this with very heterogeneous, but very powerful field of investing.
Wonderful. Well, I think we are pretty much out of time. I'm really sorry to everybody who we haven't had a chance to answer your questions, but if you get in touch with us via the gainuk.org website, then we will get back to you with answers to some of those questions. And we can always do a follow-up event at any of your schools, or also just get in touch with us via the website or via our Instagram page if you're interested in pursuing a career investment. Natasha, thank you so much for sharing some really great insights and valuable career tips. I think that's been inspiring and helpful for everybody. Thank you to the audience for joining us. Hope that was interesting, and be in touch if it's something you'd be interested in pursuing further. Thank you,
Thank you
Natasha.
so much. Bye.
Bye-bye.